Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, Thursday, 15th of August. You know that this market had a lot of sell-off during the last couple of weeks, and we've been waiting for data that shows us that soft landing is happening and we are no longer in a recession. So today's data, retail sales, coupled with the fact that Walmart reported earnings, are key to really understand what's the sentiment right now in the markets. And as you can see, retail sales came pretty strong, 1% coming from the minus 0.2. We were expecting a little bit of an uptick, but we crashed with 1%. And also, initial jobless claims came lower than expected, continuing jobless claims came lower than expected, and also Walmart beat estimates and raises outlooks as it sees stable consumer health. Consumer is the pillar, the key of the market in terms of growth. And this data today and Walmart earnings just had the last spark to really push this market higher, to climb the wall of worry that we had last week with the huge freak out, the 65 bigs. And in this market, it's pricing in 25 basis points with 75% of probabilities in September, and another rate cut of 25 basis points with 61% of probabilities. And then we have the jump on 50 basis points on December. Let's just forget a little bit about December, but these two are already saying, we know that the Fed can cut rates because the economy is strong, because the inflation is under control, and we can start that cycle. The economy does not need a huge imprint of money, a huge support from the Fed. So that's why the 50 basis points, it's quite concerning, but we are no longer that. We are 25 by 25, and the pace in which the Fed cut rates, it's key to really see this market continuing to the upside. Because when the Fed starts cutting rates and we see lower interest, if we are in a recession, that means that this is supporting the economy because something is broken. But if we see rate cuts, but at the same time, the economy is growing, the economy is healthy, the consumer is still spending, this market is going to price in a lot of growth. And that's what Wall Street wants right now. And that's why we are seeing this in the markets. In the 5-minute chart, we had a big breakout. Look at this overnight. We tried to climb higher. Everyone was waiting for the data in this descending pattern. I miss this manipulation move. That's what I would like to see. I would have liked to see that. But we never took that sell side liquidity that was pre-market low. We push into the data and we held there. That was, I was watching the DOM and it was super thin, super thin. There was no liquidity. Everyone was watching that. And then suddenly in this candle, 125 lot in the NQ sparked. And then I think there was some kind of a leak. And then we saw the 1% increase in the retail sales. Then I didn't have the opportunity to take this setup that I would like. But I saw the market structure. I saw that we held this fair value gap on the 5-minute, and then I went to the 1-minute and see, okay, let's buy the first pullback. Let's see that the manipulation already took liquidity here. We are holding up there at 200s. The data was good, and I can risk 22 points in just this candle. It was just waiting for this candle to close. I put there the entry, I waited for that, and I put the stop there. This is the typical setup of momentum trade, and where's my target? Where's my target? I cannot target just 400s, 500s. I had a pivot prepared here in the 30-minute chart. Let me just show you. There was this pivot here. And on the day in which we sold off pretty hard, that was a pivot that it was in the middle of the sell-off that we didn't respect, but at least I had some kind of support became resistance. I didn't want to just get rejected, so I just put it there. I could have just basically put in 400s up here and I would have met my goal, but at least I have that. And that pivot was successful. And then we started going and chopping around this pivot here, waiting for the open. I took 97 points and I never looked back again. I closed everything because days like this, in which we have a lot of momentum, can turn into range days, which I really hate. So I just put an alert at 450 right here, and to really come back to the market to see the price action and to prepare the video. And oh boy, we are following the 45 EMA like glue. We are basically squeezing all shorts and algos are buying everything. Nvidia is 3.70%. Consumer discretionary like Tesla is 6.24%, Amazon is 3.64%, the entire sector, XLY, it's 3% in the green. Huge. And what I like the most is 3% in the green for the small caps and the RSP really pushing. Because what, as I was saying in the intro, what is showing these retail sales is not only that the consumer is strong, is that growth is still there. And then the rotation is coming back to small caps, coming back to big AI plays, and coming back to the equity indexes. So as you can see, I was preparing order blocks for a pullback. I was preparing the 30-minute, this 30-minute pullback. When you have this strong 30-minute pullback and you don't even have the opportunity to join in a pullback, this market is squeezing. And so I have prepared some kind of resistances here from that day of sell-off on the 1st of August. We have a couple of fair value gaps there on the 30-minute and the 1 hour, but as you can see, those are being destroyed. So let's just remove them. Let's just focus on what is happening right now. What is happening is that we have strong fair value gaps not being pulled back. We have order blocks. I think here I'm going to, this is a huge, these are huge order blocks. Huge order blocks. Let's just recap. An order block is a counter trend candle that investors and institutions use to really fill in a lot of orders and continue the trend higher. So these order blocks are institutional, are being protected. So the first one that we want to see hold is this one. And then we have this small one, which I would like to see also. But I'm already preparing for tomorrow. I'm just going to do some golden pockets pullbacks. This is aligning pretty well on the 1 hour and 30-minute. We have this pivot also. I was waiting for exactly that on the pullback, but we never had that opportunity. So let's remove everything. As I was saying, this pivot is gone, and let's focus on targets. The 1 hour, I have the volume profile. And the first thing, I think what we are going to see is these guys being hunted. The liquidity up here at 770, it's going to be, it's still, from here to here, it's 0.74, that would be 3%. It's not the first day that Nasdaq goes up 3% against all odds. But we have a couple, for example, we have what was this? This was a pivot, a zone of resistance. I mean, I'm going to remove this. Oops, not that. I'm going to remove, let's see the daily, because the daily is super important. As you can see, we are in the middle. This is an inverse fair value gap on the daily with a buy side liquidity here and a gap left behind. So if we go to the 1 hour, we can see how this daily it's pulling back into this. We pulled back into this golden pocket from the all-time highs to these lows. This was the first time of the pullback, a good reshort, but this would be the second time. And I think the golden pocket is no longer in play. We are so bullish that we are going to hand the liquidity at 700s most probably. The all-time high liquidity point of control is already below us, and also the point of control from the bottom. So we have both all-time high investors and people that bought the double bottom here in the money. So they are just letting it play. They want to just continue pushing it. And this is a game changer, because I think what happened today already shows that US is strong enough in the economy and in the consumer that the Fed can stay calm and just cut interest rates in a progressively manner. 25 by 25 by 25, and that's the pace that everyone wants, because that would mean that the economy doesn't need a lot of support. We are just slowly going back to normal, and everything will continue growing. And that's key for you to understand. This situation right now is the perfect storm on the interest rate cut cycle. Fed would be super happy to start cutting interest rates in this situation. So just let them play. I think tomorrow is going to have a little bit of continuation. I would be bullish tomorrow for sure. And it's just a matter of being patient, have your levels, try to get in those trends, and just let it go. This 45 EMA has been gold in order to track trendy days, and I mean this market is going to be awesome for days. The daily is already showing you. Let's just remove everything. Look at this. The daily is already showing you that we are strong enough to really climb the wall of worry into the all-time highs. This is what I see happening even before the Fed cuts interest rates in September. So let's see what happens. That's all from my side. As always, thank you for your time. If you found this video useful, please give it a like, subscribe to the channel, because I upload videos like this one every single day for market forecasts, market updates, and market recaps. I appreciate your time as always. Remember that discipline, patience, risk management are key for your success. Stay safe, everyone, and see you tomorrow.